Hello, good afternoon. Welcome to Divorce Literacy Podcast. I'm Wendy Dabrusin with the Divorce Lending Association and Benchmark Mortgage. And today I have the pleasure of interviewing Justin Kessel with Kessel Group Insurance Solutions. So Justin, tell us a little bit about yourself and your background.
All right. Well, thanks, Wendy, for having me on here. So I used to work for one of the big box home services companies, and I quit that in 2016, and I kind of randomly fell into the insurance world. So I've been doing health insurance for the better part of a decade now, and I found that I really enjoyed insurance, which was never on my radar. It was never something that I ever thought that I would, want to do. The nice part is when it comes to health insurance in particular, this world is it's such a, I guess the best word there, dumpster fire, that I've gone out of my way to find all the best ways around it and try to find the best solutions possible. And I found that I'm pretty good at that. So I've stuck with it, even with the industry being what it is, because I feel like I genuinely help people doing what they're doing.
Okay. So you basically work for private insurance for someone who doesn't have group insurance?
No, so I'm an independent broker. I contract with a whole bunch of companies, but I work for the person that I'm helping.
Okay.
And so I'm their advocate. I'm there just to show them all the different options that are available and what is best for their individual needs. The nice part is whatever company they pick pays me. So my services are completely free to the person that I'm helping. So I genuinely just feel like I'm an advocate. I'm a Sherpa, if you will. I just help them find the right option for what their situation is.
Awesome. And then how would you help someone who's going through a divorce?
So the largest uninsured demographic in the country is single parents, and so that's kind of been my focus. I mean, I grew up in a divorced household, and I saw my mom struggle, trying to raise two kids and work full time and all that kind of good stuff. And insurance is the biggest expense that someone has outside of their mortgage. And so what I do when it comes to the divorce world specifically is I've gone out of my way to find the options that a lot of the time they'll get a insurance plan that will cover the kids, but not the parent, because they want to make sure their kids are insured, but they can't really afford to have the full plan for all of them. And so I figured out ways to get all of them coverage for the same price as just their kids. So that's really like my main benefit, is I'm really good at making sure that price is about the same as they pay for just their kids, and the quality is either equal or better.
Okay. And so I know we talked a little bit, I think you had mentioned before, about how you work with, the divorce team on the wording in the divorce settlement agreement. Can you kind of elaborate a little bit more on that?
Yeah, absolutely. So like I was saying before, it's the number one expense beyond the mortgage. And so a lot of the times people will get the mortgage payment put into the divorce decrees, but they don't even think about their health insurance, because that's just not something they will generally want to write into that. But the nice part is you can actually have that as part of your divorce decree, where they will pay you X amount of money each month towards your insurance plan. And so there's a lot of times they will say, oh, we'll pay half of it, or they may even pay the full thing, depending on the discrepancy between the different incomes each of the couple brought in to the relationship. So a lot of the times the insurance can go down by a considerable amount, or even be free for the person that I'm helping, so long as I talk with them before they've signed on the dotted line for anything. And like I said earlier, my services are free, so it's just a consult where I can help them get a good ballpark of what they're looking at when it comes to health insurance, so they can make sure their lawyer puts that into the divorce decree, so that they're not, in the position where they might not even have insurance.
Yeah. Do you find that a lot of, and I'm just thinking of an example in myself personally, 20 something years ago, where he was supposed to provide the insurance, but how was I to know? I guess it would have been more of a more comfort level for me to know that I had it through my policy and I was paid monthly, right? Rather than just relying on whatever insurance that he finds, or the other spouse. Do you see that a lot where it's like they offer the insurance, but they do want to get their own policy instead?
Yes, and I've also worked with several people who the ex was supposed to pay for it, and they find out months later that the ex hasn't been paying for it.
Yeah.
So it is always preferable to have um, the more trustworthy one, I guess is the best way of putting that, to be in charge of the insurance. And if they need to go through a third party intermediary like myself,
Yeah.
I can be a neutral third party in the whole thing and just keep both sides updated on it without them having to have a conversation between the two of them.
Yeah, because knowing that it is paid, I mean, is an important thing. And so, what's to guarantee that they are going to pay and they're not going to let it lapse and lose coverage. So that's good information. Can you address a few of the most common questions that you're asked by clients?
Yeah. So probably the number one thing is, what about Cobra? And so the answer to that one is normally, if it's a regular standard group insurance that the ex-spouse has, you can stay on Cobra for the next 36 months. That said, Cobra is normally astronomically expensive for them to be on, and so normally there's a lot better option. But Cobra is normally it is an option. So if you want to keep that plan, you normally can. After those first 3 years, then of course you're going to have to figure out a different way around it. But then the next question that I probably get the most is, I've heard of this plan, that plan, or the other plan. Can you explain that to me? And there's a lot of different plans out there, and unfortunately, there's also a lot of junk plans out there that sound really good, but end up just being horrible plans that just like a lot of them don't have a ceiling of costs. So at a certain point, yes, the plan does pay, but they don't pay the entire cost of it, and they can be out tens of thousands of dollars. So there's a lot of learning that goes into figuring out what the best plans are. But honestly, the main question that I get is, I never was in charge of this. I don't understand the insurance language at all. They've always been in charge of it. So can you help? So that's probably the number one thing where I just kind of take them from step one, say, all right, so this is what you're looking at. These are the things that you really need to make sure that you're looking out for. And then let's just talk about what you can get for the prices that you're looking to pay for them.
Yeah. So you basically have different, and that was going to go into my next question. You have different options for them and different price levels. Can you kind of elaborate on those?
Yeah, so there's three main categories of plans. There's the ACA or Obamacare, Affordable Care Act, whatever you want to call it, the qualified plans. So those are either group insurance, COBRA, or the things that are on healthcare.gov. Those are they all cover every pre-existing condition out there. They're normally going to be the most expensive unless you get a subsidy, but they're also going to be the most comprehensive. That gives you all of your preventative care and things like that. Most of the time, though, those plans have far smaller doctors networks than the other plans. And so depending on the subsidy level, or the pre-existing condition level, generally speaking, I'm going to advise one of the other options. So the second option is private insurance. And those plans are generally PPO, so they have a huge doctor network and they're very customizable, so you can make them as affordable or as comprehensive as you want them to be. But the downside of those ones is they never cover pre-existing conditions and they never cover maternity. So if either one of those is a question mark, then that's not the right option for them. Then the third option, which is the kind of off the road option, and people either trust it or they don't, is what's called a health share. And so health shares are not insurance. They are basically just co-ops. It's members sharing the cost of other members' medical expenses. So these memberships instead of policies work similarly to insurance in terms of how they help their members. So they'll give them a ceiling of cost. They'll call it anything from a annual household portion to an initial unshared amount to all kinds of different things. But it's roughly the equivalent of a deductible. So that's the amount that they pay before the health share, the other health share members kick in and they start sharing the other costs. So all that to say, it looks similar to insurance, but it is not. And that is in a divorce decree, often the wording will be, it has to be insurance. And so if it has to be insurance, a health share is not the right route. Health shares also have wait periods to share in the costs of pre-existing conditions. But they do normally share in maternity. So The other nice part is they're normally the lowest cost of all of them, and they actually can give a pretty substantial equivalent of benefits. I'm using phrasing, trying to make sure that I'm distinguishing this as not insurance, that and I'm just trying to give the rough equivalent. Just legally, I can't call it insurance or use insurance terms.
Right.
But in terms of value for the money that you pay, normally they're going to be the best value.
And that's going to be through one single provider. Is that correct?
Yeah, so it's a membership to a health share, and so they're not a provider. But yes, you would have a health share through that company, and they would tell you exactly how much they will pay depending on what the situation is. And so it's the other members, basically all the members are putting the money into an escrow account, and then the health share just has the ability to facilitate moving one member's money to another member's medical need. So they're not directly paying anything. They're not an insurance company. So they told all the members, hey, this is the conditions of your membership. This is what the other members will pay for you depending on what's happening. And then they just say, okay, this medical need came up, so the other members are paying this much towards it.
Huh. I have never heard of that, honestly. And so they can choose any doctor, any procedure that they want on that.
Depends on the company. Some of them use doctor networks. Generally speaking, all of the ones that I've ever been privy to have all used either a PPO network, or they just say no doctor's network whatsoever. You just go wherever you want. A lot of them will not pay for your basic care, so like your preventative care or your like regular doctor's visits, but there's a lot of ways around that. For instance, direct primary care is a fantastic option for that. Direct primary care clinics don't accept insurance whatsoever. These are specific clinics that you just get a membership to, and it's a primary care doctor that does all of your preventative and primary care for you at a $0 copay. So just as a insurance insider knowledge, for me to give you the privilege of having a $50 copay for a primary care visit, it's roughly about an extra $150 a month that you're paying. A direct primary care clinic charges about half of that for their membership, and it's unlimited $0 copays for all your basic stuff. So if you combine a membership there with a health share, your price is normally roughly half of what you would pay for a equivalent plan on the healthcare.gov exchange, and it will be far, far, far stronger in terms of the level of care that you receive or the money that you would have to pay out in the event of medical care.
Yeah, that's good information. I did actually already interview Monica with Impact Family Wellness.
She's fantastic.
Yeah,
she considers me her work husband. I love her to death. I'm actually her client.
We actually work out together now. So yeah. So yeah, so that's some, I mean, I feel like there's so much of this information that no one is aware of. So I'm so glad that I have you on to talk about it, because like me, I'm sure a lot of people, their eyes glaze over when they start talking about insurance, because it's like there's so much information. I get the bills and I have no idea what I'm really owe and what I don't, what insurance is paying and all that. So this is some great information. So every divorce is unique, and everybody goes through their own unique journey. But if you could change anything or give anyone a heads up to anyone just starting through the process of divorce or just thinking about a divorce, what would that be?
So first, if they don't know anything about insurance, talk to an agent. Agents are always free. So just, find someone, whether it's myself or another health insurance broker or whatnot, and get a ballpark figure of what your insurance is going to look like. Now, you can always get some wiggle room later on and talk to someone and try and get that price down or get the benefits changed or whatnot. But getting a good ballpark for the amount that you're going to be paying gives you a really good idea of what you're looking at when you actually go out on your own. Like I said, you can also get it written into the divorce decree, so that's always a really good thing. But when it comes to your health insurance specifically, one thing that I always recommend to everyone is there's always a number in your head that if worse came to worse and you had a giant bill, what would be the maximum that you would be able to pay without having to declare bankruptcy? Get a policy that has at least that number or below. Anything more than that is gravy, but always make sure that you have that number in your mind, whether it's $10,000, $5,000, $20,000, whatever it is, whatever that number is, where you would say, oh my gosh, I just wouldn't be able to handle this. make sure that that's what you're looking at or better.
Gotcha.
Always make sure there's a ceiling. That's the other big thing is there's a lot of plans that will pay you X amount of money per something that happens, but there's no limit to it. So like I said earlier, there's a plan that I know of that will pay about 80% of a heart attack, but a heart attack can be hundreds of thousands of dollars. And so you might still be out $50,000.
Yeah.
So while it sounds good, you're really getting insurance for the big stuff. But the way that I look at health insurance is similar to the way that I look at car insurance. You're not looking for it to pay if your radiator busts. You're looking for it to pay if your car gets totaled. And that's really what you're looking at with health insurance. Make sure that you have that catastrophic help. And then anything else past that you get, that's just, okay, great. Hey, if you have the money to do it, go ahead.
Gotcha. So that's why it's so important to talk to somebody like you to help, because I'm sure you have some kind of intake questions, to figure out what's the most important thing and what are some concerns and what types of doctors do you visit the most to kind of you can customize a policy for them, I'm assuming, right?
Oh, yeah. And when it comes to prescription drugs specifically, if it's a generic drug, you don't need to worry about copays. You can just get a free prescription discount card like GoodRx or something like that. Yeah. Those are generally speaking equal or better than having a copay on it. Really, when you're looking at help for something like a prescription, you only need it if it's brand name or specialty drugs.
Right.
So yes, it's all just about specific circumstances. So if you have pre-existing conditions, then we need to see how serious they are. If it's high blood pressure, that's not a big deal. If it's diabetes, there's some plans that will help you, some plans that not so much. If you had cancer, let's talk about the most secure plan you can possibly get, because we don't want to mess around with something like that.
Yeah. So that brings up a question on pre-existing conditions. So there are some plans, if someone has cancer history or is diabetic, that will cover them.
So yeah, everything on the Obamacare exchange, that's everything on healthcare.gov. All of those plans have no pre-existing condition exclusions whatsoever. Right. So if you have a group plan and you're getting COBRA or you're getting something off healthcare.gov, all of them cover all pre-existing conditions, and just hard stop, they'll cover everything. It depends on what the pre-existing condition is, whether or not a health share will share in those costs. Private insurance never pays any of those costs though.
Yeah. And so on the health share, do the members vote, or how do they determine what's covered and what's not?
So when it comes to health shares, they lay all that out up front, exactly what will and won't be paid. So it's not a vote. It's that based on these conditions, they will pay X amount, and it's all up front. So for instance, okay, Zion is one of the ones that I really like, and they will they have you pay up to either $1,000, $2,500, or $5,000, depending on the membership that you get. Everything under that is on you. Everything over that is shared amongst the other members. And there's only a couple exclusions to that, like pre-existing conditions, they have wait periods and limits to what they will share. But by and large, that is what it is. And they tell you up front beforehand. So it's not a, we might or might not pay this. It's so long as there's money in coming in that is enough to pay it, we will absolutely pay it.
Yeah.
So unless the company's going to go out of business, it will always be paid in the manner that they said up front how they will pay it.
Yeah. So speaking of going out of business, so did they ever run out of money? Like what if like every member,
so that is the downside to a health share.
Yeah.
So if you have an outstanding medical bill and the company goes out of business at the same time, you're liable for any difference. So that's the extra a risk that you're taking with a health share. I haven't heard of that happening. I'm sure it has somewhere, but they always make sure to make their numbers make sense, I guess. So for instance, there was a health share that I heard of quite a bit. I had quite a few people switch over from them who they had priced themselves incorrectly. And so they got very far behind in terms of paying bills. And so they basically doubled their prices for their membership. And they spent about 9 months paying back some bills, which was why I got several clients off of it. But they eventually did pay all those bills. It's just it took them a while to build the money up because they had priced themselves incorrectly in the beginning.
Yeah.
That said, they did eventually pay all the bills, so it's not as if they didn't do right by their members. Eventually, they just did some bad math in the beginning. But that's why it's always important to, when you're looking into a health share, asking how quick do they pay, because if they pay within a month, that's a good health share. If it takes longer than that, then you might want to go with a different one.
So I'm sure you know the good ones and the not so good ones that you could recommend.
So the ones that I will generally recommend, Zion is my favorite by far. Sedera is another solid one. Metashare is probably the biggest one. Metashare is for Christians only though, so that's always an awkward question for me to ask. And then Christian Health Ministries, the one that Dave Ramsey recommends, is a very good company, although I don't offer them. I just have heard great things about them.
Okay, very good. Do you have any memorable clients that you've worked with? And if so, what's impacted you the most from them?
So I can go several directions on this one. So one of my clients that I really enjoyed, she had a high-powered CEO husband who had been cheating on her, and so she was initiating the divorce. And she found out that he was hiding all kinds of money and doing all kinds of bad things. And so I came in there just to try and talk to her about the health insurance side of things and tell her how much that was going to be. And then I was able to get her help with a forensic accountant and all the other things from the divorce resources group that we're both a part of. And it ended up that she got several million more dollars off of the divorce because of them finding all that stuff. Another one of my clients, her ex was not a great person, and he had sworn to her that he was paying all of the insurance, and come to find out that no, he was not, and she had to pay a couple $1,000s because her kid broke his arm. And after that happened, she was able to go to the court and not only make it so that she was in charge of the insurance, but he had to pay it, and he also had to pay her back for the medical bills for the broken arm. So
yeah,
there's a lot in this industry that is when there's a lot of big feelings around, a lot of bad things start happening, and so it's nice to know how to respond to those things and have an agent that's on your side that can help you respond to them correctly.
yeah. And who knows how to word things in the settlement agreement and all of that, and work with the attorneys and the divorce team is great too. What's the most important lesson you've learned over your career?
That the health insurance industry is as bad as people think that it is. That is, so what I mean by that is I have found that whenever I have gone out of my way to try and find a way to get a cash pay price as opposed to having my insurance cover it, I've not only been able to lower the insurance cost and get them a higher quality plan or a ceiling, whatever you want to call it, but they end up paying less out of pocket because they're not paying that extra money for the basically what I call prepaid medical care for their basic doctor's visits. Normally you'll pay extra $300 a month if you want to have a copay for a specialist, but if you only go see a specialist even once a quarter, let alone once a year or two, it doesn't make sense to have a copay. You may as well just go pay cash, tell them you're a cash pay patient. You normally get about 40% off. So I've learned that the cash pay world in everything except for hospitalization and above is normally better. For instance, with my insurance, I have a $100 copay for an x-ray. But I know several different direct primary care doctors who can point me to facilities where they can get an x-ray done for $25 or $50. So figuring out that I don't need to give them this Cadillac plan and really pare it down to the bare essentials and then show them how to get the best cash pay prices really makes it so that they can have a great plan for the lowest cost possible and still get the best value out of it.
Yeah. So going back to the cash pay, do you, even if someone has group insurance through their employer or something like that, do you recommend always asking what the cash pay price is?
Normally. So for instance, I have a copay with my insurance, but GoodRx often beats it. I'm just talking prescriptions there.
Yeah.
When it comes to your specialists, if you don't have a copay for a specialist, if it just says, hey, you meet your deductible first and we'll pay co-insurance, a lot of the times cash pay price is going to be better than what you would pay using your insurance because they're going to try and hose the insurance company and you get caught in between. And you could have just paid less if you just paid cash right there. So yes, it is always useful to ask that question. A lot of times it's not going to be with the right amount, but some people for a primary care visit will have a $75 copay, and normally they can go to that primary care visit for less than that.
Yeah. I mean, even for my chiropractor, it's cheaper for me just to pay direct than to go through insurance because
Chiropractic,
Yeah.
you don't even bother with insurance. That's just my
Yeah.
own personal opinion. My copay for chiropractic is $35. Mine charges $40. I'd much rather give him the non-hassle and pay him the extra $5,
Yeah.
because now he doesn't have to try and get money back from the insurance company. Who's going to take their cut, and not give him as much as he should get paid.
Right. Right. For sure. All right. Any other final thoughts that you want to share? Any questions that I missed for you?
Um, I I know that I've been kind of hitting on this a lot in this latter half of the interview, but I really do want people to understand you don't need copays. Um, unless you have a major medical condition where you're seeing a doctor on like a monthly basis.
Yeah.
Even if it's a quarterly basis, generally speaking, having copays, it's cheaper to not have one than to pay a copay. So it really is all about finding someone who can walk you through that, whether it's a direct primary care or someone like myself, or just going to your doctor and saying, hey, what's your cash pay price versus what my copay is?
Yeah.
Most of the time, you're going to find the cash pay price for everything short of a hospital visit is going to be much better than paying extra every single month in order to have a smaller amount when you do go there.
Yeah. Awesome. Good information. Justin, I appreciate you taking the time. How can anybody get a hold of you? Where can they contact you? What's the best way to reach you?
So the best way to reach me is probably my email. It's justin@kesselgroup.net, and that's KESSEL group.net. They can also text at 512-810-3896. If you give me a call, I'm probably not going to pick up because I get a lot of spam calls. But yes, absolutely text or email me. That's probably the easiest way to get a hold of me.
Awesome. Well, thank you so much for sharing your time with us. And this has been some great information. And again, thanks everybody for listening.
Thanks for having me on.